are live from Bloomberg's world headquarters in New York City. I'm Matt Miller.
And I'm Caitlin Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, from Cathie Wood to Michael Novogratz and Jenny Johnson, some of the most influential investors in the world weigh the risks and rewards of crypto.
And Coinbase's new partnership with BlackRock gives Bitcoin a legitimacy boost. We'll discuss the institutional push into digital assets with Leah Wald of Valkyrie.
Plus, that BlackRock Coinbase partnership will likely be a major focus when the latter delivers second quarter results today after the bell. We'll set the stage with analyst Owen Lau of Oppenheimer.
All of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. That is your function, and what you'll find is pretty much all digital currencies are down really across the board. Bitcoin is down 4%. We're trading close to that $23,000 level, so below 24K, which we hit earlier this week. Ether is underperforming, down 6%. You have XRP down about 5% as well, and of course, XRP and Ripple are one that has run into a little bit of trouble with the SEC as far as the classification of whether something needed to be registered as a security, which is also something Coinbase is being investigated for. Interestingly, coming into today, Coinbase was up 5 days in a row, up 56% over that time, in part related to that news of BlackRock partnership, but the stock is down 10.5% on the day now, Matt. Of course, we're awaiting those earnings after the bell, and we'll have more on that in just a moment.
Rough day for Coinbase. It's been a rough year for ARK, and Coinbase is kind of a part of that story because Cathie Wood let a little bit of it go before that big rally. But I have a really great chart put together by our London producer Dan Curtis showing that even though Coinbase's value, or the values of the shares that they own, has dropped by more than 50% from its peak, the inflows have made it so the shares outstanding continue to rise. So a lot of staying power for the ETF. Now, Bitcoin is staying range bound after coming off its June lows. Market participants remain cautiously optimistic for some light at the end of the tunnel for the cryptocurrency.
The winter is starting to thaw here.
I don't think we're going to see what we saw last year.
These sort of forced liquidations in the market, they're starting to come to an end.
Secular deflation associated with technologically enabled innovations. That's a good deflation.
Institutional demand to be able to trade crypto through some of the more traditional huge players.
Bitcoin is the greatest distraction from the greatest disruption that is happening in financial services today.
We're not seeing huge institutional flows, to be fair, but we're not seeing anyone back away.
As we start to come out of this winter and people are trading again, the tools, the capital will be in place to do so.
All right, so this great distraction has had a pretty big bounce, but it's still 65% below where it was trading at its November high. Many retail investors still reeling from the losses that they've felt because they bought in then or at a price higher than $23,000. But is the volatility spooking the institutions? That's the main question. Shonali Basak may have the answer. Shonali?
And it's a great question. We first have to think about how big of a universe this is, because institutions, they're everything from corporations like the ultimate hodler, MicroStrategy, or big asset managers and hedge funds like BlackRock, Fidelity, or Brevan Howard Digital, which recently reportedly raised a $1 billion fund, the largest ever launch for a crypto fund. Now, billionaire Mike Novogratz told us flows are not flooding in, but there's nothing but forward progress. And Coinbase's Brett Tejpal said in recent weeks that these clients tend to be slow-moving giants. But he also said that institutions may not be racing to buy Bitcoin at a moment's notice, but they are thinking about crypto as a way to move settlement onto blockchain. Now remember, Coinbase struck that notable deal with BlackRock that sent its stock soaring. And not only is BlackRock the world's largest asset manager, it also works with the world's biggest wealth managers through its Aladdin business. Now, when you look at Coinbase's quarterly results, the first quarter showed that institutional trading volumes actually jumped while retail dropped almost 60%. And institutions made up more than 3/4 of the volumes, and it expanded work with huge clients like Millennium Global and Brevan Howard. Analysts expect this trend to hold up a little longer. Now, it comes at a welcome time for Coinbase, which said that transaction revenues for retail users are declining and is likely to fall to pre-2019 levels. And it's important to remember how different these businesses are. Retail clients are starting to instead pay more for staking and subscription services, while institutions are looking for prime brokerage, custody, and market-making capabilities. So even if retail investors account for a bulk of the fees, you can see that there's a real reason for them to diversify.
All right, Sonali Basak, thank you so much. Let's continue the conversation on institutional adoption with Leah Wald, CEO and co-founder of Valkyrie Investments. Leah, we're going to talk more about the BlackRock Coinbase partnership and how it specifically may help out Coinbase in a moment. But just in terms of what the signal is for the broader industry, what does a giant like BlackRock teaming up with a crypto player like Coinbase signal about where the space is headed?
Absolutely. And Matt and Kaylee, thank you so much for having me on. It's a great question. This is a big deal because it shows that institutional interest in digital asset is far from waning, despite what we're seeing in the markets. Really a huge vote of confidence to have the world's largest asset manager offer it to their clients. And BlackRock really wouldn't be doing this if there wasn't significant demand from both institutional and retail clients. Actually, though, the announcement was over a year in the making, and the firm started making really key hires last summer and announced it to build out its digital asset, their digital asset strategy. But what's most important to me about this announcement is that Aladdin will be linked to Coinbase Prime. So Aladdin, as we know, is BlackRock's proprietary portfolio construction and risk management platform. It's used by more than 200 institutions around the world. So this move doesn't just give reliable access to Bitcoin to BlackRock, it really opens the literal floodgates for pretty much any institution to allocate. And that's banks, sovereign wealth funds, insurance companies, pensions, corporations, other asset managers, huge pools of wealth. And now they can seamlessly integrate Bitcoin into their broader portfolios of traditional assets. And in their portfolios, they can view it very comfortably. So I see this, and my team sees this as a seismic shift, really, in our industry, and maybe a seminal moment that we need to be watching. What's going to be interesting is that it should be fascinating to watch how Bitcoin volumes start to gradually move higher over the next year or so before they maybe all of a sudden jump as more institutions do begin to pour into the space because of that integration ease. And I do think, Coinbase stock being down is likely a result of the traders pricing in an expected downturn in revenues during this crypto winter slowdown.
Well, and the SEC investigation doesn't help.
Yeah, it definitely doesn't. It definitely doesn't.
Leah, we've heard similar. Sonali was talking to Mike Novogratz a couple days ago, and he also was saying that institutional interest hasn't waned. It hasn't really increased too much, and I don't know if he was taking BlackRock into that, if he was putting BlackRock into that equation, but it hasn't waned. If you look at the price action since November and look at the blockchain, can you see, who's selling, what the retail to institutional ratio looks like?
Yeah, and I think that Sonali was absolutely right. I was happy to hear it. On the macro level, there's actually been 6 straight weeks of inflows into crypto funds, at least that just came out from CoinShares report, and that's a total of 529 million. If you look at other macro issues or macro events, the Schwab crypto thematic ETF just launched. In regards to your question about on-chain analytics, it's not always easy to tell exactly who's buying and who's selling, but what you can tell is that there is a lot of volume and a lot of interest. So with this type of market, which is seeing a lot of very interesting technicals, traders are still playing it. So for me, that's definitely a positive and a bullish for, what may happen in the later part of the year, which we believe we will see a up. But to give you really how early stage this industry is, going back to BlackRock, if BlackRock puts only 1/2 of its AUM, around 50 billion, it really could send the value of Bitcoin to just under $100,000.
Yeah, I totally get it. I mean, BlackRock is gigantic, and I feel like it was only yesterday that I was buying Bitcoin for well under $1,000. So, Novogratz was hesitant to give us a price target yesterday, a near-term price target. Of course, he's been burned hard by Terra Luna. But what do you think? Where are we seeing Bitcoin going? Are we going to break out of this, low $20,000 range? Do you think it's going higher? Could it go lower? What's your outlook?
I mean, I would love to hear from you since you bought at 2,000. That is very impressive. I'll just say I wish I had, but the technicals are interesting. Many large cap digital assets are in the process of recovering towards the 200-day moving average after being just battered for months. And we do believe that this is a bear market rally and that the trend is still for markets to continue grinding lower through the rest of the summer. But there are some positive events and there's some plays to be had. You know, the ETH merge moving towards protocol, you know, towards proof of stake is happening soon. There's some interesting events. To your question, price targets, I will just say as an obnoxious Bitcoiner, one Bitcoin will always be worth one Bitcoin, but we are bullish before.
I want to point out that I bought a Bitcoin once for $600. The first one I paid $800 for, and then I bought them for $600. I wish I'd bought more when it went down to 75. You know.
Well, that's what everybody's
timing is everything, right? Leah, I know you don't want to give a direct price target, but at least do you think the bottom is in? And if yes, why?
Great question. I do think that this is a buy opportunity, and it matters entirely, of course, what your time horizon is. I think that for many day traders, for swing traders, you're looking at something very different, maybe even position traders. And again, unfortunately, I'm quite bearish right now. But if you're looking at a longer term horizon and, you know, again, you sound like a hodler, Matt, so you probably are, then I do think that we're looking at a really good zone.
I'm more of a hobbyist. I only bought Bitcoin for reporting purposes. I wasn't ever a size.
Purely investigative.
Investor. Leah, thanks so much for joining us. Great having you on the program. Leah Wald there of Valkyrie Investments. Coming up, Coinbase is set to report its earnings after the close. We'll get a preview with analyst Owen Lau, a senior analyst at Oppenheimer.
And the fallout from the crypto winter has resulted in a flood of luxury goods hitting secondhand markets. Lambos, however, are doing just fine. We've got more on that story ahead.
And to access all the latest data and the news on crypto on the Bloomberg terminal, type CRYP Go. This is Bloomberg.
There was just, a little bit more uncertainty. Okay, how many of these will they have to delist if they decide not to register with the SEC? Or if they register with the SEC, how will that change their business model? So you saw that we sold very little, but we did it, we were in a day where the markets were very volatile.
Cathie Wood, their CEO of ARK Investment Management, speaking with Bloomberg yesterday on why the company sold some of its Coinbase holdings last month.
And of course, Coinbase will be reporting after the bell today. Analysts expecting a rocky set of numbers when they cross the wire, including a decline of more than 50% on trading volumes. Owen Lau, senior analyst at Oppenheimer, who has the equivalent of a buy rating on Coinbase shares, is joining us now with more on what to expect. Owen, how bad could it be?
So first of all, thank you for having me. So how bad it can be very bad. I think it will be one of the toughest quarters for Coinbase as a public company. So I'll give you 3 points. Number one, revenue. We expect that the trading volume will be down by about 30% quarter over quarter. And I just looked up the consensus estimate. I think our revenue number, it's about 5% below consensus. The second point is about the expense. I don't think the street has modeled the expense, in particular the write-down on crypto assets that Coinbase own appropriately. And remember, the total market cap for crypto was down 50% sequentially in the second quarter. So I expect them to have a pretty sizable markdown here. The third point is Coinbase lay off 18% of employees in the second quarter. It will benefit them longer term, but in the second quarter, they have to take a $45 million charge on the income statement. So overall, low revenue, high expense, very challenging.
Okay, so Owen, obviously these are going to be concrete numbers we're going to get out of the company, something that you can actually model. It's a lot harder to model just regulatory risk as an overhang on the stock. How do you begin to handicap an SEC investigation into whether or not Coinbase properly registered assets as securities?
So I think the conversation right now is the SEC wants Coinbase and Binance and FTX to register with the SEC. And SEC think that I think 7 out of 9 tokens are securities, and that's the case around the insider trading. My point of view is, yes, we are going to hear the regulatory headline risk from the SEC, I don't think we can get away with that regulations through litigations approach from the SEC in the near term. But I do see some good news. One of them being actually last week, the Senate Agriculture Committee proposed a new crypto bill that suggests to allocate Bitcoin and also Ethereum to be a so-called digital commodity. And they asked, so if that bill get passed...
So the CFTC would regulate them.
Exactly. The CFTC will regulate them. So I still feel like this is a long debate. I don't think the verdict is out there yet, but I do see that in the near term, there will be risk and headline risk hitting these stocks.
Oh, and I'm looking at CoinMarketCap a lot to see what the league table looks like, so to speak, for these exchanges. And obviously Binance is the biggest, but Coinbase looks like it's possible they could slip from number 2 as FTX takes the lead there. What do you think?
I think part of that is because Coinbase does not have the derivative business. So FTX and Binance, they're doing quite well in that derivative business and also the business outside of the United States. One thing Coinbase has been doing is, number one, international expansion. They got the license in Japan, they have the license in Germany, they just got the license in Italy. I think they're expanding in Europe as well. And the second point is about the derivatives. And if they can expand internationally and also derivatives, I think, go back to your league table analogy, they should be able to climb that back up. The question is, how long does it take them to expand these services further in other countries and also going to derivatives?
How important is the underlying price of the assets to the stock price of Coinbase? I mean, how correlated is the price of Bitcoin to the price of coin?
I think this is a great question. This is one of the debates in the market. To me, Coinbase make money even when Bitcoin goes up. They also make money when Bitcoin goes down. So because they charge fees on that. But if you look at the correlation recently, they are very highly correlated. I think based on my math, it was about over 90% correlation. But longer term, I still think we have to look at the fundamentals, how Coinbase make money instead of the direction of Bitcoin. But again, I think it will continue to be a great debate in the market. But longer term, I still think the correlation should break down.
Oh, and finally, we were just speaking with Leah Wald of Valkyrie, who described the announcement of the partnership between BlackRock and Coinbase as a watershed moment for the industry. What kind of watershed moment is it for Coinbase specifically?
Yeah, I think so first of all, I think it's a validation to the industry, to blockchain and digital assets. For Coinbase, it is also a validation to Coinbase reputation, the technological and also the service aspect. There are many, many other prime and crypto service providers out there. But BlackRock, as you just mentioned, the largest asset managers, they chose Coinbase. This is one of the biggest deals for Coinbase. And Coinbase can use that as a use case and expand that use case into other TradFi and other companies, and not just being an exchange for retail customers. They can also be a technological and service provider for traditional financial services companies.
All right, Owen Lau, senior analyst at Oppenheimer, thank you so much. Going to be a busy man after the bell once Coinbase earnings cross the wire. And of course, don't miss our exclusive interview with Emily Choi, president and COO of Coinbase. That's coming up at 4:30 p.m. New York time. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons with Matt Miller. Now to some crypto stories that caught our eye this week. Senator Elizabeth Warren is circulating a letter that would ask a key U.S. bank regulator to withdraw Trump-era legal guidance underpinning Wall Street's foray into crypto. According to one of Warren's aides, she is asking colleagues to sign on to the letter and plans to send a final version to the Office of the Comptroller of the Currency soon.
Niche credit traders have a pitch for crypto holders locked out of their accounts at Voyager and Celsius. Sell the rights to your coins at something like a 75% discount and let Wall Street worry about the rest. Bankruptcy claims traders are offering quick cash payouts to customers who don't want or can't afford to wait.
And crypto companies are taking on the marketing might of car makers, beer brands, and other big-time sporting sponsors. According to data compiled by Bloomberg, crypto companies have committed more than $2.4 billion to sports marketing in the past 18 months. However, this year's slump in the crypto market is likely to test the willingness and ability of companies to throw money at leagues, teams, athletes, and maybe stadiums.
Yeah, and many crypto buyers have been consumed by a single question as they've watched the prices of coins rise and fall over the past few years. When Lambo, the luxury vehicle, has become the ultimate symbol of success when it comes to getting rich off of digital currencies. But despite recent crypto price pressures flooding secondhand markets with other luxury goods, demand for Lamborghinis remains strong, suggesting Lambo owners are so wealthy they're essentially undisturbed by market price changes.
I love that story, the idea that, okay, I have enough money, I don't even feel it. But actually, our colleague who wrote that story spoke with the CEO of Auto Coin Cars, which is basically a platform that lets you pay for these luxury cars in digital currencies. He said actually that typically when markets are bad, they do better and have more sales. And his theory is that people want to get out of crypto and put it into something actually physical.
Something
and then
a little bit more solid.
Like a luxury car.
Like a Lamborghini. I mean, if I got rich on crypto, it's definitely one of the first things that I would buy, especially the Aventador model, because it's one of the last Lamborghinis that'll have a naturally aspirated V12 engine, and maybe one of the last cars in the world you'll be able to buy with that kind of power plant before everything goes electric.
How did I know you were going to go totally on the auto side of this equation rather than the crypto side?
Well, you brought it up.
I did bring it up. Yes, this is true. And of course, you see the Lamborghinis often parked outside of big crypto events and in Miami, and it's definitely a way to flaunt if you made a move like Matt Miller, and we're an early buyer.
One of my very favorite cars of all time. But it's very interesting to see that that's changing now. Those are going to eventually go electric, and I'm sure crypto buyers will buy a lot of EVs. I'm sure they probably buy Teslas more than any other car.
Well, I guess we'll wait and see if that bears out. That's going to wrap it up for Bloomberg Crypto this week. We will be back same time, same place next week, Tuesday at 1 p.m. Very special guests will be joining us, Matt.
Yeah, we're going to get Jesse Powell, the Kraken CEO. I also want to take this moment, Kaylee, to say happy birthday to you.
Thank you, Matt. I appreciate it. It's a great birthday just because of this.
Is Bloomberg.